Ladies and gentlemen, excellencies, good morning and welcome to the Global UAE Energy Forum by Gulf Intelligence. This is the session on the outlook for global oil supply and demand 2021, a perspective from the Middle East. I'm Frank Kane, senior business columnist with Arab News of Saudi Arabia, and I'm pleased to be joined by a distinguished panel. Let me introduce them before we commence. First of all, let me introduce to you Adam Sieminski, President of the King Abdullah Petroleum Studies and Research Center, KAPSARC, the Riyadh-based energy think tank. Then we have Omar Najia, who's Global Head of Derivatives at BB Energy. Omar is UAE-based, but BB Energy's business encompasses the world, as does Omar's expertise, from oil trading to financial markets. Robin Mills, I'm sure is familiar to all of you. He is the Chief Executive of Qamar Energy, a well-known expert commentator and author. What Robin doesn't know about oil really isn't worth knowing. And Laury Haytayan, Beirut-based director of the Natural Resource Governance Institute, also a renowned energy expert, but who can also broaden the discussion into the very interesting geopolitical aspects of global energy. We'll hear in detail from these people, and there will be time for questions from the audience towards the end, so please send those in. So today we are going to talk about the fundamentals of supply and demand from a Middle East perspective. We'll look, of course, at the market forces at work on producers in the region, as was crystallized in the recent OPEC Plus meeting. We'll get some sense too of how the current improving price regime might affect US shale. At what level does it make a full return to global market after the carnage of 2021? But we'll also be looking at more existential issues like the energy transition, the move towards electrification and cleaner fuels, and the whole question of peak oil. We will also touch on the financial pressures on energy corporates in the region. ADNOC is driving privatization of various parts of its business, while Aramco went for the big bang of an IPO. What further corporate developments are there ahead? We'll also briefly consider the options for the port of Fujairah in the UAE as it seeks to enhance its position as a leading global bunkering hub. And all this against a wider backdrop of a new US administration that has its own agenda on energy and its own approach to the region, especially with regard to Iran. Will Iranian oil become a significant element of OPEC Plus negotiations anytime soon? I will ask each of the panelists to give a brief overview, no more than a couple of minutes, please, on the essential question: how does the Middle East see global oil supply and demand in 2021? Let me ask that question first, please, to Laury Haytayan. Laury, over to you.
Thank you, Frank, and thank you for Gulf Intelligence for this conference and for allowing me to be part of this. I think at least what we're looking for 2021 is like on the demand side. I guess what we are still talking about is COVID-19. How efficient the vaccination will be. Now we're hearing a lot about like the skeptics about vaccination. Do we want to get the vaccine or not? And how will that affect and how efficient the vaccine will be? And now we're talking about mid-year recovery. So what will that mean? So for instance, if they tell me like mid-year in June, July, I can travel, definitely I would want to take the plane and travel and go for vacation, or even go and see my friends and my colleagues in our London office or the New York office. But will that be the reality afterwards? Or that will be just a spike and then we'll go back to a new reality, trends that we don't know. So on that demand side, the transportation mobility side, this is something that we want to see where we're heading with that. So that brings us back to the supply side. Again, I want to know like if this OPEC Plus collaboration will continue. We've seen what happened in January, very interesting to see Saudi Arabia taking things in hand and this surprise of a 1 million barrel drop. What would that mean for Saudi Arabia, for Russia, for OPEC Plus? Will they continue in this collaboration, in the solidarity, or there will be some changes? And last, I think for me, on the geopolitical side, and will have an effect on the demand and the supply, I guess, it's this issue of Libya first. Will Libya continue to bring more barrels into the market? Because that will have an implication if the demand doesn't pick up, or even if it picks up. And then Iran, US, definitely Iran, US, everybody's talking about it. And if you're sitting in the Middle East, everybody thinks that this will be the first thing that Biden will be doing, rushing and going to Iran to find a deal, which I don't think, we can discuss later, which I don't think will be the case. But what will mean in Iran coming back mid-year or end year, or even in 2022? And last point, it's the Arab-Israeli rapprochement. Because that will be a game changer as well. Will Qatar join the peace deal? And more importantly, we'll be watching in 2021 signs of rapprochement and the relationship between Saudi Arabia and Israel, because that will be a big game changer for the whole region. And then if we'll see if this will happen in 2021 or in 2022, but it will change the dynamics definitely on the energy side and on the economy side in the region, where everybody would want to be part of the region and invest in the region if that happens. Which brings us to the point that then they would want to have more peace in the region between the Arabs, Israel, and Iran. So that will change a lot.
Laury, thanks. That's a great intro. Adam, let me put the same question to you. Middle East perspective, supply and demand. Are we heading back towards rebalance?
Well, Frank, thank you very much. I'm delighted to be here at the Gulf Intelligence Energy Forum. And Laury gave a great overview of some of the geopolitical issues. Let me try to just add some numbers into the mix here for you. KAPSARC does a quarterly report. We call it the COMO, the KAPSARC Oil Market Outlook. For 2021, we're expecting demand growth actually to be one of the strongest on record for the oil industry. A little over 4 million barrels a day of demand growth, kind of recovering from the problems in 2020. In 2022, and this is the good news for 2021, we expect that demand will continue to grow, maybe a little bit under 4 million barrels a day, but that by the end of 2022, we will have recaptured the 7.5 million barrels a day of demand that was lost in 2020. So the demand outlook actually is pretty good. Now, Laury gave some caveats. I agree with that. I mean, if the second wave gets worse or affects more countries, obviously this will have an impact on demand. But the vaccine is being rolled out in many countries. My wife had her vaccine shot yesterday here in the Kingdom. I'm getting mine tomorrow morning. It's happening in many places around the world. So that's probably the good news. We might have a bit of a hiccup in the first quarter of this year, but I think things will get better as we move towards the end of the year. So we're looking for demand in 2021 of almost 96 million barrels a day. It'll be just under 100 million barrels a day in 2022, and that'll beat the 2019 number of 99.3 million barrels a day. On the supply side, I'm not going to get into OPEC politics here, but I think that the supply growth, even from US shale, is going to be relatively limited in 2021, and that's going to give an opportunity for inventories to come down. I think we will see supply growth in 2022, but probably at a level that does not exceed the demand growth. And so we're, I think, looking at a supply and demand balance for this year that's fairly attractive, and it will remain so as we go out into 2022. Thanks, Frank.
Okay. Thanks, Adam. That's a really good overview. So it looks like, you know, we've taken a big hit, but we're getting there, aren't we?
Yes.
It seems. Omar, let's have your take on this. You know, the intricacies of supply. I know you have views on that. Give me your broad overview, if you would, please, on balance and rebalance. Hello.
I'm not hearing Omar.
No.
Sorry, guys, I was unmuted.
Okay.
So
Right.
we saw in January that Saudi came and said that they would shoulder, you know, the extra 1 million barrels in cuts. I don't think they're doing it because, you know, they want to be popular. I think they're doing it because they need to, and they need to do it very badly. And the fact that they're doing it is, to me, an indication of how badly they need the price higher. Which is good, because I think basically it's you know, speaks to their quote unquote commitment, not only to OPEC plus, but to, you know, if they have to do it single-handedly, then they will. So I'm not too worried about supply. Demand, I think, you know, as you go forwards in time, everybody's going to get vaccinated. Certainly in Dubai, everybody's getting vaccinated. So I think demand is going to come back. So, you know, you either want to view this as glass half full or glass half empty. We definitely view it as glass half full. On the Iranian stuff, I agree with Laury. There's no deal. There's not possible to be any deal, not now, not in, you know, a long, long time. So no deal. Biden can't afford to look weak. Iran will not negotiate their, you know, missiles, no way. So no deal. On the geopolitics, I think basically, you know, Biden's coming in with a lot of very interesting people, you know, in his cabinet. Let's call them, you know, neocons, basically. And I think it's I don't anticipate, you know, kind of, you know, peace breaking out in the Middle East and flowers and all this kind of stuff. I don't think so. I think basically, you know, the rapprochement that we've had between, you know, the GCC and Israel has been, you know, a fact for very many years. It's just, you know, come to the forefront, if you like, or been publicly acknowledged. But I think, you know, the problems in the Middle East basically lie with the US and with Iran. And that geopolitical situation extends to Iran, Yemen, Lebanon, Libya, same players, same ideas, you know. So I don't think basically you're going to see any kind of, you know, great, you know, geopolitical premium disappear. I think you'll probably see it increase. As to prices, I think basically we are bullish. The world is bullish in terms of commodities for very many reasons. And I think, you know, if people start flying again, transportation, all that kind of stuff. But I think, you know, it's also important to kind of understand that nothing moves in straight lines. We've come up a huge long way, much higher than people had, you know, were thinking basically. So we might get a pullback. And if you want something that indicates not the bullishness, but the aggressiveness or the risk appetite out there, you just need to look at one thing, not gold and not oil and not the equity market, Bitcoin. So Bitcoin has gone stratospheric, right? 40,000, something like that. And that's an indication of risk appetite. So right. I think basically, you know, going forwards, bullish the markets, bullish equities, bullish oil, and also, funnily enough, bullish the US dollar. And I think basically the US dollar has set a low. And it is possible to be bullish oil and bullish the US dollar. And I think basically, you know, let's see what happens. But I think the low in the USD, in the, you know, dollar index is in. Yeah. So it'll be very interesting to see what happens.
Omar, that's the most bullish I've heard you for a year, I think. Did you have a New Year's resolution to be more bullish?
Well, yeah, exactly. You kind of got to look at the market and say, you know, which way is it going now? I think, you know, you've seen the downside, you've seen death and destruction, you've seen no hope, you've seen it all. What else is going to come? You've seen the second wave. I mean, what else is going to be? What else is going to come around the corner? We don't want to tempt fate, but anyway.
Okay. Robin, are you equally bullish? Are you going to temper that view?
Well, you know, Frank, I'm not normally so bullish, but
you may know that on Twitter, or a bunch of the oil analysts on that have an annual bet on where we think Brent will end the year. And I was lucky enough to win that in 2019. In 2020, I'm not even going to tell you what my call was, because obviously we made those bets just at the end of 2019, and things were a little bit different from what we'd expected. But I actually repeated my 2020 bet in 2021, and it was a pretty bullish call. I won't give you the exact number, but you can look it up. And I think, look, that fairly bullish call was really in the view that I think OPEC has got a challenge. It had a challenge from March, April last year, before instituting the production cuts, and it's still dealing with that challenge, which is really, it's made unprecedentedly deep production cuts in the response to an equally unprecedented drop in demand. Now, 2021, we're hopeful that the rebound in demand will be very strong, and as Adam says, perhaps in 2022 we'll be back above 2019 demand levels.
Right.
And yet OPEC has got the challenge of, okay, so how does it regain market share? How does it eliminate those cuts? And we saw, of course, the original plans we know from OPEC was, well, we're going to bring back 2 million barrels per day at the start of 2021. Then the market looked a bit weak because of the resurgence of the pandemic and so on. So then and there was some pressure, I think, from the Saudis to say, let's not make any production increases. But then other members of OPEC Plus were in favor of production increases, and we ended up with this compromise of adding 500,000 barrels per day each month. And then, of course, in the latest move, we've seen a move not to make that increase in February, and for the Saudis to make this unilateral cut of 1 million barrels per day. So, they're still facing this tension of restoring production and regaining market share, but also trying to support prices. Now, I think the Russians have said repeatedly that they look for a price in the $50 to $60 per barrel range, whereas the Saudis, perhaps if they haven't given a number, but they have, at least in their policy, suggested that they are inclined to raise production more slowly and try to enjoy the benefits of higher prices instead. So there's a growing tension, I think, within the OPEC Plus group. I wouldn't want to overplay those tensions. It's not like we were back in March and April last year when there was a outright price war briefly in action. But there are definitely tensions and differences of opinion. And this, I think, will be an ongoing theme through 2021. How does the market look? How is demand recovering? Okay, some members are pushing a bit more to regain production. Others are preferring to hold back. And obviously, now they're meeting monthly, so every little bit of news will be digested and taken into account on making those decisions. Right. And then there's the factors that Laury and the others have pointed to. Is Iranian production going to be coming back, at least to an extent? Is Libyan production holding up? So there are the members outside the OPEC Plus agreement, but who still have significant, perhaps extra production to add, and that will upset the balances as well. And then, of course, the competing producers like US shale. So this I think will be the theme of 2021. This cautious dance towards gradually eliminating these very large cuts.
Okay. Can we dig a bit deeper into the Saudi 1 million barrel cuts that was announced last week? It was surprising. Abdulaziz bin Salman, the energy minister, said it was historic. So, what do you think was the motivation? Omar thinks the Saudis did it because they need the money and they have to. What's your thinking, Robin?
Yeah, I mean, Prince Abdulaziz said it was historic, but there's also some not very good history in that line. Of course, when the Saudis have made unilateral cuts, which they'll definitely not want to repeat, of just being the sole producer that is making deep cuts while everybody else increases. In this latest agreement, of course, Russia and Kazakhstan got a little bit extra production, not really significant, but the Saudis wouldn't want that to become a trend of the others all being handed out increased quotas. So that indeed it was surprising. I mean, I think it's got to be seen as a temporary move, because if it becomes a permanent feature, then that's not going to be desirable at all from the Saudi point of view. I think it was a way
of a split within OPEC. Do you think?
Well, I think at the moment it was a way of squaring the circle on these demands from various members. Some wanted production to increase again in February, as along this schedule, and others, in particular the Saudis, preferred to hold back, and this way they've managed to stop the others increasing, because obviously the Saudi cut has boosted prices, so everybody's gained a bit on the price, even if not on volumes. But when we come into the next month, if the market still doesn't look great and the others still want to increase, I think it'd be dangerous for the Saudis to commit to making further cuts in production.
Okay, yeah. Omar, tell us a bit more about your thinking on the big surprise Saudi cuts. There was an economic imperative here, you think, was there? Tell us a bit more about that.
Well, I mean, you've heard, look, the Saudis, basically their big idea was, Aramco, and we'll sell 5% of that. That didn't work out too well because of regulatory issues they had. So they had to sell like a tiny little bit of it on local exchanges. Then you have basically, you have a massive budget deficit, massive. You have a war in Yemen, which isn't cheap. You have basically this kind of, Vision 2030, which also isn't cheap. You have Neom City in the desert, which also isn't cheap. And then you had this, there was a new one, I think, a city under the ground or something like that. I can't, I don't remember.
This is part of Neom.
Okay, yeah. So this is what. So how do you attract foreign direct investment if you have issues like we saw in the problems in Turkey? How do you attract that kind of foreign direct investment? They wanted to attract also companies to move out of Dubai and go to Riyadh. And I think, there's no issue, but the optics are not good. So in other words, Saudi needs to have funds. They want to diversify their economy. It's not going to happen by magic. It's going to cost money. They want to, improve infrastructure. No magic, costs money. They need to, retool their population, educate, whatever it is. It's going to cost money. So I really don't think that, I mean, it's not Saudi in particular, but I don't think there's any country that does things out of, loving mankind and all that kind of stuff. And if somebody says that, then, I'd treat it with a bit of skepticism. So yes, they did it because they needed to, because they knew that if they didn't do the heavy lifting, things would fall apart, because they also know that they've taken a big part of, for example, the Iranian non-production, the Libyan non-production, blah, blah, blah. So you got to kind of, it's not like this magnanimous, we're going to do it for love and because we, OPEC and all this kind of stuff. They do it because there is a fundamental need, and that fundamental need is a massive budget deficit, a sovereign wealth fund that's basically depleting very, very quickly, and they spend a lot of money. I think they're the third or second largest spender in terms of defense equipment. So yeah, they need the money.
Yeah, Laury, what do you think? Any thoughts on Saudi motivation here?
So I don't want to add to what Robin and Omar said. I kind of like, especially on the money side, definitely they would need the money to go ahead with what we always call it like diversification. These countries in the Gulf that are like dependent on oil and gas need to diversify the economy. But to diversify your economy, you need to put money. And where that money comes in is from the oil and gas. So this is like the issue. So that's why if the demand is not coming back and they need the money desperately, definitely it was not like, it was, of course, it was a surprise to everyone, because I'm tracking all my colleagues, the analysts, and I know that everybody was surprised. Nobody was seeing that coming. So, but they needed to increase the prices. And I think this is what is happening today. When you see this $56, people talking now about $60. So that is the effect of this cut of the 1 million, at least for now. And then you see like other countries like Iraq, they need desperately the money. You've seen the deal that they've done with China, the prepayment. This is the first time they do it because desperately they need the money. Unfortunately, they need the money to pay for salaries, not to put an investment and diversify their economy. Iraq is another situation, but many of the countries in the region need the money. So if they cannot increase the volumes, they want to see a price, a higher price. And this is what's happening. But I think the issue is that going forward, will Saudi Arabia keep on doing that? I know that they don't like doing that. We know that they don't want to take the responsibilities on their shoulders. But I guess in January, they were like differences in opinion, differences in how the market is going to evolve. And Saudi Arabia took the decision. Like, I think I don't know if it's a fatigue of like meeting every time and discussing the same things, hoping that the economy will recover and not recovering. This COVID 2.2 we were discussing second wave, but I don't think like people were discussing this new strain and the new kind of COVID that is like more harmful. So I think it was a kind of they needed prices to be higher, and this is the strategy that they thought of. Going forward, let's see what will happen if they will want to continue.
So it was at least partly because of fears about the pressures that might come from the second wave that we are currently in, of course. And that of course is an economic factor as well, isn't it? Adam, I won't ask you to comment on Saudi policy initiatives, but I will ask you about the energy transition, if you would please. I know you have thoughts on this, and I'm wondering, how big is the pressure on producers now, all producers, from the forces of the transition away from hydrocarbons that we've been reading about and hearing about for a long, long time? It must be becoming real, mustn't it? And what can they do about this to mitigate the effect on their economies in the years ahead?
All right. Well, Frank, thanks for that opportunity. One of the things that is happening here in the kingdom is an initiative called the Circular Carbon Economy, where the idea is to address emissions and climate issues through the 4 R's of reuse, recycle, and
reduce and remove.
Reduce is the important one, and remove. Thank you. I want to, leading into that, let me make a quick comment on Vision 2030. Diversifying the economy obviously is a huge part of that, but 2 of the other big pillars of Vision 2030 are the vibrant society and the measurement and regulatory systems to make things go. And there has been a huge amount of progress here in terms of that will ultimately have implications, positive implications for the economy, in things like women driving, women in the workforce, changes in to make ease the regulatory burden associated with forming new businesses and that kind of thing. I believe that the amount of progress that's been made in that is probably being underestimated, and that it will have a positive effect on that economic diversification goal. And if you think about the circular carbon economy, and reduce has been the one that most people have concentrated on. It's one of the easiest to implement, things like efficiency or fuel switching, moving to renewables and so on. It also includes nuclear power. But in the reduce and recycle area, there are things that could be done, and some cutting edge technologies that ultimately could give Saudi Arabia a technological lead and an opportunity in the export markets for things like the green hydrogen project that's going on at NEOM, the blue hydrogen efforts that are being made by Saudi Aramco and SABIC, and a number of other interesting opportunities, things like using CO2, carbon dioxide in curing of concrete. And the obvious remove options of carbon capture and utilization, which the kingdom has the unique, well, not unique, but a really strong geological position. So coming back to, what are the options for the kingdom, and what about the possibility of an energy transition away from fossil fuels? Look, keep in mind that the problem is not carbon dioxide. Carbon dioxide can be very friendly in many cases. The problem is fugitive emissions. And if you can deal with the fugitive emissions through technology, then you're making a lot of progress. And I think that the kingdom's programs on this, and you'll be seeing a national program rolling out to advance the technology for all four of the options in the circular carbon economy will be really strong.
Okay,
and that will preserve the hydrocarbon production markets here, because it will produce clean hydrocarbon fuels.
Adam, let me stop you because we want to go to a question. Lisa, if you could pull up the first question that we touched on this earlier. This is the all-important question in many ways. Goldman Sachs said recently, last week, that Brent crude would reach $65 by the middle of this year. All you have to do is agree or disagree. So while you're doing that, let's go back to Robin, please. And I want to ask about US shale. This is a relevance to this question, Robin. US shale, it had a horrible year last year. At what price does it come back, do you think? We've seen different views just recently, haven't we? At what price does it come back?
Yeah, and question there, I think, is also what price is enough to stop the decline in production, and then what price is enough to see renewed growth. And I think the current prices are at around 50 is enough to probably to stop the decline, but I think we'll need to see prices sustained above 60 to go back into growth mode. Right. I think that's the key range. And I think we've seen a lot more conservatism in the US shale industry in terms of pronouncements of returning cash to shareholders and more limited growth ambitions and so on. I'm a bit skeptical of those. I think, look, if the price goes up enough, all that will evaporate and everyone will be back to drilling again. Right. But as long as prices are 50 to 60, I think you'll see that rather cautious investment mode.
Omar, what do you think?
No, I think basically shale is done and dusted, and I think you have to look back at the origins of shale, right? So the origins of shale, in my opinion, is what they do is they've invested, let's say, $1 trillion to make $1 billion, and then they say, look, so basically, you invest $1 trillion, you borrow 900 billion, and you end up basically making $100 billion and saying, look, I've made money. But shale is, all you need to do is just look at the equity prices of shale companies. They're all down the toilet. They can't even buy each other because they don't have enough equity in the business. So they have massive debts. They have basically, they're like, a lot of companies now in the US and the West, which are basically zombie companies. They can't even make enough money to pay the debt that they have to service. So, the growth bit of shale is gone. Gone.
Even at $65 in the summer?
Even at whatever price you want to put it. The problem is that look, if you have $100 now, and again, it's proved by, share price. If you have $100 now, somebody says to you, shall you invest in Amazon? Or shall you invest in like a shale company that has like, I don't know how many, billions of dollars of debt, and they'll pay you, 10% or whatever it is. Which one are you going to go for? And especially now when it's a risk kind of on, and people are worried about inflation, all this kind of stuff, bonds and fixed income, blah blah blah, is not going to work. So you can forget about growth shale. You might still have them like teetering about and stuff like that, and you can forget about the USA energy dominance and all this kind of stuff. And in my opinion, you can even forget about all this green and all this, oil is the cheapest thing, the cheapest source of energy there is. Transportable, people have invested in it, infrastructure, blah, 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 blah. Unless you do something, you can forget about, solar and wind and all this kind of stuff. Just doesn't give us enough energy, and energy demand is going to skyrocket. I think it doubles every 10 years. I can't remember. But anyway, so this energy transition, I don't know what, and it's not for me.
Okay.
I'm not a believer.
Okay, you are a believer in fossil fuels.
Yeah, because they're cheap.
Okay, yeah, cheap and efficient and powerful. Yeah, Laury, let's move on to some of the geopolitics. We're kind of heading that way, aren't we? President Biden elect. What difference will he make in US energy policy? What difference will he make to the shale industry? What difference will he make to the region?
Well, like he had a very ambitious green energy program, and I guess he inherited that from the Bernie Sanders agenda fan base, if you want, when he was nominated to be the candidate for the Democrats. I think he will push on the green energy, but that doesn't mean that shale will stop. But again, it's not about their ability to be able to come back as much as it's the ability of who wants to invest in fossil fuel, who wants to invest in shale. I think this is the issue. It was interesting this morning. We heard in the opening speeches the Minister of Energy in UAE. He said, "Look, this is the recovery year, and we don't want shale to flood the market. They need to be responsible the way we are responsible in maintaining the balance." But on the other side, we see the Russians saying that if we don't fight for our market share, shale might come back. So it's like there are different views on that. Biden will push for his agenda. I'm not sure how much he will have an impact on shale and the other private producers and on private lands. On the other side, I guess, to come back to the region.
Yeah. Iran is the big question, isn't it, Laury?
Iran is the big question. Again, they might start the negotiations 2021, but that doesn't mean that they will lift the sanctions before going to negotiations, right? Because this is the strongest card they have in their hands. Will Biden remove that as a condition to start the negotiations? I don't think he's going to do that. And then, so maybe negotiations might start in 2021. I see it very difficult that the production or export, like at least Iranian gas will come to the market, or oil and gas will come to the market, and what kind of a market, right? Because there are like changes that have happened through 2020. So will they have the same market ready for them? Do they have the capacity now to increase the production, as they're saying, because they want to do deals with national companies in their country, and do they have the capacity, technical capacity, to come back? That is another question. So, but I think, yes, we might start Iran, US might start the negotiations this year. I see it difficult that gas or oil and gas will come back. Iranian oil and gas will come back this year.
Okay.
But this is something that they take
very nicely, Laury, into the next survey question. If you wouldn't mind, if we could just get that put up, please, Lisa, because this is. So the question is, when will Iran be included once more in OPEC plus quotas? Will it be this year, 22, or never? So if you could vote along those lines, please. Did we get the results from the previous question?
Yes, well, we can show those after.
Okay. Okay, while we're waiting for that, Adam, are we seeing any signs from President-elect Biden? Any clues as to what energy policy will be from the kind of officials that he's chosen so far?
Well, I think that he's remaining quite consistent with his discussions during the campaign. And, one of the first acts of the Biden administration will be to rejoin the Paris Agreement, just as an example. But Biden has consistently throughout his entire career been, I would say, practically minded. And I don't expect to see radical changes in policy. I think that we will see a shift towards greener ideas, but not anything like the green plans that have been advanced in different places.
Okay, so those won't
Just
fly.
a quick example, Frank. The chairman of the Senate Energy Committee is going to be Joe Manchin from West Virginia, a big coal state, and Joe
Okay.
Manchin is going to be inclined to be supportive of using hydrocarbons in a clean manner.
Right. Okay. So he is no radical. Okay. Robin, just on Iran and very briefly, because I know you follow this very closely. When will Iran be a force again in OPEC, do you think?
Yeah, look, I think the question when Iran comes back to being a significant exporter and the question to when it's a force in OPEC are maybe different questions. I mean, look, very briefly, I expect that the Biden administration will effectively, it'll ease up a bit on the sanctions fairly early on. And we'll see more Iranian oil coming back on the market. We've actually already seen that to a limited extent. Now, how quickly the administration is able to get into negotiations with Iran and how fruitful those are, I think that'll take longer. And there's Iranian elections coming up in the middle of the year, so there'll be a new president to deal with fairly soon. I don't think we'll see any substantial or comprehensive agreement really before the end of the year at best. And look, it may be much longer, it may be never.
Yeah.
So I don't think we'd see a major relaxation of sanctions until probably the end of 21 at the very best case. We'd see a bit more Iranian crude back on the market. Now, let's say there is a deal at the end of 21, early 22 maybe, and that's comprehensive enough to satisfy everybody. Iran could restore its production. It's got a lot of oil in storage as well, so it could get back to pre-sanctions levels of exports fairly quickly, within a few months. And then, that will be something for OPEC to accommodate. If demand is increasing 4 million barrels per day, as Adam suggests, in 2022, okay, that gives some room to add 1.5 million of Iran's exports and to accommodate that. But I mean, inevitably, it's going to put stress on prices, and it's going to put stress on the OPEC Plus agreement. I don't really see Iran joining that agreement until it's got back to full production and had a decent run of full production.
Okay. Lisa, can you show us the results, please? So the first question about price. People are going against the great Goldman Sachs. People don't believe Goldman Sachs. This is quite staggering, really. 73% disagree with the notion that Brent will hit $65 this year. What do you think of that, Omar?
No, I think it will, but a very interesting question. So imagine you make a deal with, like let's say Iran made a deal with the US and it was ratified by the UN, and then the US basically says, stuff you, we're not going to follow it. And then you get another US president that comes along and says, well, you know what, let's make another deal, but this one I really promise we're going to follow.
Right.
What would you do? Would you say, oh, yes, absolutely? And we had the Europeans who were supposed to guarantee the deal, right? And they did nothing. So, I mean, you have to try and understand. I don't think, honestly, I really don't think that people or Iranians are stupid. I really don't. So basically, what did Bush say? Fool me once, shame on me, fool me twice, and then got confused. So no deal, never, no deal.
Lisa, can you show us the other results, please, to because this is germane to what Omar is saying about Iran. So they'll be back next year, 22, seems to be the consensus, the majority view there, which I think is, more or less what we were saying, wasn't it? Can I? We are running out of time. There's one question which has kind of intrigued me and bugged me, and I would like a quick run around the four of you. In view of the various peace rapprochements that we've seen in the region recently, with Israel, with Qatar, what are the energy implications here? And the question is, when does Qatar rejoin OPEC? Robin, what do you think? Briefly now, as we're running out of time.
Yeah, I don't think Qatar will rejoin OPEC. I think they've gained from being outside it. Would they come into the OPEC Plus framework? Maybe. But no, I don't think there's any real need for them to rejoin OPEC. I think the main implication of this energy-wise is allowing trade between Qatar and its neighbours again. So LNG cargoes can presumably will now be able to go from Qatar to the UAE and Bahrain and other markets if those develop. And it's perhaps a bit more positive for what happens to the Dolphin pipeline, which of course has continued operating normally throughout the whole period of the embargo. But there's questions over whether that will be expanded or whether there'll be a renewal of that contract in the from after 2032.
Okay, Laury, can you just say a few words on the Eastern Mediterranean? What the peace dividend might be there, if any?
Look, East Mediterranean, it's a new chapter now. I can talk for 1 hour. Just to take so let me say, definitely the region, the East Mediterranean region, is seeing itself as the new gas hub, right? Especially now that everybody's talking about gas being the transition energy, being there to stay, contrary to coal or maybe to even oil. So they see themselves like that, but there are difficulties, geopolitical difficulties first, and definitely there is price issue because still the gas in the region is very expensive to be competitive. But and now that we see that the market might be in Asia, again, we're far away from Asia, not close. First, because the ambition was to sell to Europe, and knowing the statement, the mindset of Europeans. So I think they see themselves as this new gas hub. Reality is that there are a lot of difficulties for them to become that hub, but they can be players among themselves. So this could be a gas hub among the countries of the East Mediterranean if they involve Turkey and not put Turkey on the side and alienate it. So a lot to see there, but we're monitoring the situation in there. And now we know that the UAE is very interested in joining the East Med Gas Forum as an observer. That would be interesting to see how much investment will be put in the East Med Gas Forum that is supposed to be if you want, the Opec of the region. So let's see how much investment will be put in that. Something to watch in 2021.
Thank you. Well, look, we could talk for hours. I know each of those subjects has at least 2 hours worth of conversation in them, but we've run out of time and I'm being told to close you down. So Adam, Omar, Robin, Laury, I'm very grateful for your time. It was really interesting. And let's go back to the main forum. Thank you all.
Thank you, Frank.
Thank you.
Thanks, everyone. Thanks, Frank.
Bye.